Good day, fellow investors. Is this a new world? We have to discuss so much because this week has been shocking. Economics, finance, global trade, everything. However, we have to look at the risk and reward of things, look at the long-term outlook, and see how we can benefit as investors. Let me just give you my opinion. The goal of tariffs is to make America prosper again, because up till now other countries have prospered and got rich at the expense of America. And then I look at the weight of the US stock market in the world, and I see it here at 65%, was 70% before tariffs were started to be implemented and discussed. So it was 30, then it went to 40, and now we are at 65. Yes, America did not prosper thanks to the last 20 years of global trade, of selling its global technology across the world. So that is simply a fact that doesn't hold. Other nations getting rich and powerful, in my opinion, yes, free trade makes everyone richer, and other nations getting more rich and more powerful. Europe was 20% of the global market capitalization. Now it's 12. Okay, emerging markets have boomed 6, 7, 10% growth rates over the last 20 years. Just 10% of global market capitalization. Japan was 40 and now is 5%. And with what America is doing now, Japan's scenario is also now a possible scenario. Because if you look at things, okay, bringing manufacturing back to the United States, technology, knowledge, capital made America and the market prosper in the last 20 years, not manufacturing. And if we look at unemployment in the United States at this moment in time, we are at 4.1%. 4.1%. If I look at this from 1974, only once, twice has that low level been reached. Thus, we can say this is full natural unemployment. Thus, there is no need for manufacturing jobs. So this is purely a political huge gamble that will cost everyone, except me, because the more volatility in the markets, the more money we make, but that's a different story. However, my opinion is that tariffs are not good. The fact that we as value investors make money and take advantage of opportunities benefits us. So I am, let's say, there 50-50 because that's how we are structured. However, in total, global free trade, we all live better. So look at this. Apple revenue from China is 17%. 17%. Sales dropped a little bit because of the uncertainty, but the S&P 500 is made of 7% of Apple. 17% of that is 1.19%. 1.1% of your pension fund invested in the S&P 500 index, 1% of your retirement, is thanks to China getting rich, because now they can buy iPhones. That is how global trade make everyone prosper. And if you want to be richer, you want your neighbor to be even richer so that you can trade and get rich together. If there are barriers, everyone is poorer. That has been proven economically over history, no matter how. So the reasons simply don't hold. Okay. Then there is the power question. Okay, that's something completely different. Trump wants to test America's power in the world. If it works, good for America. If it doesn't, it will backfire and it will be very, very bad for America. We will see what will happen. However, if we look at the markets, when I was preparing this, for now, it was very, very bad for America, very bad for everyone. And the question is, where will this end? S&P 500 suffers worst drop since COVID as tariff rattled traders. Tariffs have been implemented to everyone. Okay, and there is already Canada and Mexico special deals there. But the US is picking a fight with practically everyone. This is never been done in history. You usually pick a fight with one, and then you work with everyone else. But when you start picking a fight with everybody, this is too much diversification. As value investors, we know that diversification doesn't work, it's diversification, and that is exactly what's going on now. And then we have the fear of retaliation on retaliation, countermeasures, tariffs, lower global trade, but there is also the hope that some countries will deal if they offer phenomenal offers to the US. And now the question is, okay, what will happen going forward? The question is, who has the real power? Who will blink first? Who will endure more pain? That is now the uncertainty. Reactions, lower interest rates, higher interest rates, central banks, money printing, all of those things will be seen and known in the next few years. But this is really a change in scenario from what has been stability over the last 15 years. And here just a note on tariffs. They have been launched on the 2nd of April. Why? Because at the 31st of March the quarter ended, so that this maybe repercussions are not in the back quarter. Everyone rushed with purchases, pushing GDP higher. Look how we are doing great. And then tariffs were announced on the 2nd of April, not on the 1st of March. So that is again a political manipulation that I don't know how the US population is living with that, but that's something that one of the 50 things that I don't rationally understand. But okay. Anyway, also the market doesn't understand, so these are the results. Political pain has already started. Trump's polls approvals drop significantly. Now we have to look at recession, possible. Perhaps not in the first quarter because everyone rushed with purchases, but will it lead to rate cuts? Not if there is inflation. However, this chart really shows a little bit on the potential impact that trade and barriers have on countries. So, of course, South Korea, look, Mexico is the most with the US and Canada, but the rest of the world doesn't have that big of an impact, as the US also has trade going out globally. And you can see here China, it's just a few percentage points of its GDP. So yes, it is a little bit, it is an impact, but the companies will survive. The world will survive. European Union will survive, especially if global central banks can lower interest rates to help what's going on. Central banks in Asia already started doing it. Europe started doing it. Perhaps this will also allow lower rates as OPEC decided to pump, to lower rates, to go into a fight, and then teach a lesson maybe otherwise. Anyway, perhaps the US will not be able to lower rates in case of a recession because of inflation. Because if you look at US smartphone market share, Apple, okay, great. Then we have Samsung. So we have China, we have Korea, and none of these phones are made in the US. It is not possible to transfer Nike factories because you can simply not build this at this stage in the US, and then maybe in 2 years things change again and you have invested a lot of money and then things change. Anyway, even if you build it, the price of the product goes higher. So apart from that, there are long-term relationships, long-term supply chains, things like that, and that's also why Apple produces in China. And you can see that the rest of the world is there also expanding, but you look at this mining production, rare earths already there in China, lithium, copper imported, so everything has to be diverted. So you need to build things, you need to do this, you need to do that. And given the uncertainty, given the changes in political policies, few are going to invest hugely in those changes that might revert in the next few days, and then you lost your billions. So high uncertainty, lower investments, recession ahead, lower rates for many countries, which can then go along to money printing. We'll see how much inflation we get, where we get, who can lower, who can't lower rates. A lot of unknowns. And then some say inflation can surge despite a recession. Will tariffs drive the US into a recession? We will see. We don't know. We will see. It is possible. And then we'll see. This crash, market crash, is already a start because it lowers your confidence, your consumer spending, your retirement funds. You say, okay, now I have to pause a little bit, and that can lead into a recession. Everything is behavioral because it depends on our human behavior. So we don't know what the demand for US treasuries will be, what the deficits will be, what the long-term debt trend, what the interest rates, what are other factors that might arise. You never know. That's investing. We know that markets have been overvalued in the past, and now this is, let's say, reverting to the mean based on these factors. And we'll discuss the market outlook quarterly that we usually did JPM in a few hours as I'm crunching these videos because now it's a hot topic. And then there is the question on US dominance versus the world. Who will adapt sooner? Who has a higher pain tolerance level? The plan was that tech will invest huge amounts of money into AI, things like that. And now the news is that they are already reverting from those announcements. If we look at deal making globally, from 500 billion in the last quarter to just 250 billion in this quarter. So 50% less deal making, less acquisitions, less everything on the uncertainty there. Worst case scenario is US isolation, because is the US really so powerful that it can pick up a fight with the whole world? Macron here already said that it's time to pause investments. The Ursula von der Leyen said that they will retaliate, and so we have a global trading war with the US, with everybody. And we will see. Maybe the US is so strong, maybe not. I have not the knowledge to know what will be the changes in policies, what will be the global trade agreements routes, but these tariffs and isolation usually leads to isolation and lower prosperity, especially for the country that's picking a fight globally and a little bit globally, but usually people will adapt. Now, when it comes to investing, lower prices lead to higher returns. So this is always a positive for investors. You reinvest, you buy more, and especially now with these opportunities, the market is selling everything. There is no this or that, everything is in the red. And now we have to start thinking of value, moats, long-term durability, long-term competitive advantages, no matter what, and then you have something. I mean, Amazon, one of the strongest businesses in the world, falls almost 10% in a day. 10% in a day, which means that the likely long-term returns, recessions, this and that has to happen here and there. But think long-term, where will Amazon be 10 years from now? And that is your investing answer, at what price you like it. In general, I think that we humans are smart, not always, but over the long term we'll hopefully do the right thing and increase the prosperity globally for everyone. I want everyone to be richer, because if my neighbor is way richer than me, I simply get also richer. That is what we have enjoyed in the last 20 years, 25 years, which have been the best years in human history. I hope that the next 25 will be even better. If not, we will adapt and value investing will thrive.